Hello, everyone. I see that some of you are signing in. That's great. Just be a few minutes. If you have any problems, you can send me an email. If you're having any problems seeing the screen, hopefully you can see it right now as you sign in. Hey, Joe. Good to see you. Hey, Sue. Great to see you too. Amin, hello. Awesome. Great. There's a few more coming in. Just takes a little bit of time for everyone to get logged in, so we're just giving it a minute or two, okay? Hey, Stuart, great to see you. Glad you're able to make it as well. Okay, people are still coming in. Takes a while for everyone to be able to get access, so we're just going to give it a couple more minutes if that's okay with everyone. Hello, J-Cell. Okay, so it's 2:02, so we're probably going to try and start now. Yes, let's see. So I'd like to say good afternoon and welcome to our first webinar meeting, and a few housekeeping items to start with. This is our first webinar, and we're really hoping that technology will be on our side. We had a little bit of time there just getting the panelists logged in. So if for some reason we do lose connection or we have a technical issue, please just give us 5 minutes to join back in and resolve the issue. So as we move through the webinar, you should be able to ask some questions down in the bottom bar, questions and answers. And at the end of the webinar, we'll do our best to answer all those questions. And if we do miss them, again, after we finish the webinar, there's going to be a screen after we sign off with the email addresses of all the panelists. So you can email us directly if there's something we missed. So again, welcome to our downsizing webinar. The thoughts of downsizing can be very exciting, and at the same time, it can sometimes be overwhelming. And the reason is there's an awful lot to think about. So whether you're downsizing maybe in the next 5 years, or it's going to be sooner rather than later, one of the things I always say is that pre-planning is key. And your main point of contact, even at the pre-planning stage, will always be your realtor. Your realtor is going to give you an idea on the current value of your home. And they're going to show you other types of homes you may want to consider. And this is going to be really important when you're planning out and figuring out what's going to work for you and where you'd like to live. But most importantly, your realtor will also help guide you through the entire process. They're going to be able to direct you to other professionals that you may need along the way. Realtors have a stable of referral partners for anything and everything that you're going to need. So they're going to be one of the ones that you want to have your main contact with. And today you're going to get to meet a few of those people. So my name is Sandra Barnes, and I'm a mortgage agent with Dominion Lending. And I'll be covering some different kinds of financing options a little further on. And Jonathan Griffiths, he's a well-respected real estate lawyer, and he's going to be sharing on power of attorneys and wills. And Clare Platt is here from The Next Step Forward, and she's a professional organizer. She assists you in accomplishing your goals while being mindful of the environment. And she's really good at keeping you focused and on plan. So we're going to start with Clare. We're really excited, Clare, to hear some of your ideas and helpful tips. So welcome.
Thank you so much. Hello, everybody. So glad to be here today. I'm going to talk a bit about my company and what we do, and also talk about what to do with your stuff. So I'm just going to move right into it. So my company is The Next Step Forward, and we provide compassionate help with downsizing and decluttering. With compassion, we will partner with you to declutter and organize, downsize, estate clear, manage your move from start to finish, help maximize your home's potential, and reduce your stress. So what is decluttering all about? Well, decluttering is basically balancing what you need, want, and love with the space you have. And that's really important to keep in mind, the whole balancing. It's very important. You do need to have that balance in order to have a really nice, comfortable home. So why declutter? Well, really, decluttering is all about making your space more functional and providing easy access to your day-to-day items. One of my mottos is, if you can't see it, you're not using it. You want to be able to store and protect your special items and sell your house faster, and really just to make you feel good. Studies show that decluttering provides physical and emotional health benefits. So we do estate clearing specifically. So we will work with you to clear an estate of unwanted items. We'll help you figure out where they should go. We'll help you decide what to donate, dispose, and we'll find an efficient way to either sell or get rid of your items. So another question I get is, why would you hire someone to do this? The biggest reason you would hire someone to do this with you is so that you're not doing anything in a crisis. You're taking the time to actually go through the process, because it is a process. And your family definitely wants to help you, of course, but they're often working full time, taking the kids to hockey or dance or whatever, and they're gonna try to fit you in. This way you get to have a professional who has expertise and connections and can help you move through the process. So why start now? The reason to start now is so you don't have to do it in a crisis. So you can go through the process, because it is a process. It's not something that's going to be done right away in a day or two. So participating in the process gives you a sense of satisfaction and allows you to make the right decisions in a non-stressed way. So another big question I get from everybody is, do I have to get rid of everything? And the answer is no. You don't have to get rid of everything, but you do have to make a decision about how much space you're going to dedicate to that one thing. I have an example here, and this is actually a little box, and I don't know if you can really see it. And this box is the space I've decided to dedicate to my loose photos. Of course, I have my photo albums, but I also have a bunch of photos that I haven't done anything with, and I have used these because they are such a great solution. These boxes, you can get them at Michael's. They stack really nicely, and they come in all kinds of patterns and colors, and they're a really good solution to store your photos. So again, it's all about making decisions about how much space you want to dedicate to one thing. So let's talk about where to start. I always suggest that you start in a place where it's small, so it's not a big, overwhelming thing to do. Start in the front hall closet, for example, if you have one, because you can bet there are mateless mitts and gloves there that you need to get rid of. Take everything out, get rid of the mitts and gloves that have no mates, get rid of ones that have seen better days. Start organizing and put everything back that you're keeping so that you've already started and it's not a huge job. Another place to start is under the sink, whether it's the kitchen or the bathroom sink. You can bet that there are lotions, potions, and motions under there that haven't seen the light of day for ages. And you have to remember that lotions and cleaners lose their effectiveness after a few years. So you don't always want to keep them around because they're not really going to work. The other place to start is either the spare bedroom or the den. This is, again, a good place to start because you're not in that space every day. And once you get it done, hopefully it's not overwhelming for that space, but it gives you the momentum so you can get started. So those are really good places to get started. Remember, start small. It's a process, and that's going to help you move forward. So I'm going to share my screen right now because I want to talk about the things that you can actually do with your stuff. So I'll share my screen here. Hopefully everybody can see it. There, can everybody see my screen?
Yep.
Does it look funny? I can't seem to make it any bigger. There we go. Okay, so we've got our regular things to do to donate and recycle, and I'm going to talk a little bit about that. You can gift things to people if that's what you like to do. I'm actually not going to address that too much. Every situation is different, so you know, when you're working with someone, you can make those decisions. I'm going to talk about the selling and the keeping of your items. So let's talk about donating. So donating, I'm a huge fan. I think it's really important to donate so that things aren't getting to our landfill. And really, it's a way to give back to the community. So things that you're not using, it's, you know, donate them instead of throwing them out. I'm only going to talk, I mean, we've got the Value Village and the Sally Ann's and other places to donate to, but I'm going to talk about two specifically here. One is a charity called New Circles, and what they do is they work with people living in poverty and help them to move to the next level and settle in a new home. What I like about them is that they have two programs. One is it's called the Glow program, and it's the gently loved outfits to wear. And what they do is they set up their environment like a retail so that people get to go in and choose what they want to wear instead of somebody just giving it to them. And the reason I like that is because people then have pride of ownership if they've actually been able to choose what they want. The other program they have is a prom dress program. So they provide beautiful outfits for people that might not necessarily be able to afford it. So I love that idea as well. The second one is called Second Life Books. People donate, you know, books to Value Village and Salvation Army, but they're not really in that business. Second Life Books provides a service where they actually come and pick up your books for free. They will then donate 80% of them to children's book banks, correctional facilities, and women's shelters. And I really love that idea. Then what they do in order for it to be a business for them is they actually sell 20%. So I'm a big fan of those because I really believe that books need to be read and reread. And again, we're trying to stay away from anything in the landfill. So the next thing I want to talk about is selling your items. There are a number of different ways to sell your items: consignment stores, antique stores, and fine art houses. And depending on what you have, I've worked with a lot of my clients to do an online auction. Online auctions are a great way to sell a whole bunch of things all at once. It's like you take pictures, you upload them, and then the auction runs for a couple of weeks. And then you have one day where everybody picks things up. But I want to talk to you a bit about that. I hopefully you can see this. This is actually a Hummel figurine. And it's important to remember that collectibles like Royal Dalton, Hummel figurines, fine china, they don't have the audience that they used to have. So they're not going to get you a lot of money like they might have done 50 years ago or whenever they were hot. So it's just something to keep in mind when you're looking at selling your items. I actually put this screen up here because it's really interesting to, when you're looking at selling your items, it's really a good idea to know where they came from and what they're all about. So when you're selling them or describing them, and even for your own peace of mind, knowing what era it's from is really important. And I'm putting these definitions up here because I found them actually a little bit interesting. The antique, it's 100 years old or more. And that's important to remember. So something you bought 50 years ago is not an antique. And it might look like an antique, but really it has to be 100 years old or more. And that's important to remember. Collectibles, well, collectibles are like comic books, baseball cards, figurines, Royal Dalton, whatever. They don't have to be 100 years old, but you know, they're collectibles. But what I found really interesting was the retro and the vintage, because I would have thought that would have been flipped around actually. So the retro era is 1950 to 1959. Vintage is 1960 to 1979. Really, I would have thought that the 1950s would have been vintage, but and Art Deco is the 1920s and 30s, and mid-century modern is the late 19th century, and Art Nouveau is 1890 and 1910. I just thought that was something interesting, and again, it's a good idea for you to have an understanding of where your furniture or your items are from. So recycling, I want to keep everything out of the landfills as much as possible. So I want to talk about a couple of these recycling places. Staples Canada recycles a lot. They recycle batteries, pens, mechanical pencils, and of course ink from your printer. So as much as possible, I send those out there. CNIB has a great program called Phone It Forward. And what they do is you give them your old cell phones or your Blackberries or your personal devices, and they will securely wipe them and then add on some accessible applications for the visually impaired, and then they will give it to their clients. And I think it's a great way to recycle your cell phone so that, again, it's not getting to landfill. The other program is the Electronics Recycling Association. And what they will do is they will take your old computers and laptops, and again, they will securely wipe them, and then they will donate them to schools and community centers so that kids have access to them. So I'm a big fan of those organizations so that they can keep things away from landfill and give back to the community. Sorry, my mouse keeps flying. So keep. So I will work with you, and it's a good idea to keep your day-to-day items, set them up so you have a warm and inviting atmosphere that is free of clutter and a joy to be in. Decide what items you want to keep or give away and put them where they're easily accessible. Remember, if you can't see them, you're not using them. So it's a good idea to make sure that you have them labeled and you know where everything is. And so really, that's all I've got here. I'm going to stop sharing my screen here.
Oh, that was great, Claire. Thank you.
You're welcome.
It was awesome. And I think over the last few weeks, many of us have started to embrace that decluttering task, and you've certainly given us some great tips. Thanks again. So as we have some major life events in our life or changes, this is usually a time that it's always good to revisit our power of attorneys and our wills. And as I mentioned, Jonathan is a well-respected real estate lawyer, and he has a wealth of knowledge and experience in this area. So I'm sure that he has some important little things to share with us today for us to take away. So welcome, Jonathan.
Well, thanks very much for having me, and thank you everybody for coming on. I now know that I'm a retro lawyer, just in case. So that's why I had trouble with this technology stuff. It comes from being retro. So it was good to find that out. So thank you, Sandra, for having me. You all know and love Sandra. She's so dependable. So I know from dealing with Sandra that if we get a file in, she's all over it. And it may be 11:30 at night, it may be 1 in the morning, but she's on it. So nothing slips through the cracks. So it's and you know, especially the way things are right now, you really have to have something that's dependable. The deals that we have falling apart now are, a lot of the time it's because somebody has used an undependable mortgage broker. Just huge. So if you want your deals to close, you better talk to Sandra, just because she'll make sure they go. She's got all the experience and all the contacts that allow things to go through. So thank you for having me. So we're going to talk about this happy subject of wills and powers of attorney. So sometimes I get calls from agents telling me, oh, well, the seller died last night, but it's fine. We have a power of attorney. So of course, having a power of attorney is absolutely no use once somebody dies. So you've got this dichotomy between the power of attorneys while somebody's alive and a will is after somebody's dead. So the power of attorney means nothing after death, and you can't use a will until somebody actually passes away. So sometimes I feel like the power of attorney is more important than the will, because it affects you while you're alive. Once you're gone, and your beneficiaries are going to carve up your estate. So just quickly, I'll run through there are two basic types of power of attorney. One is personal care, and that's the one I call pull the plug. That's the one where they all stand around your bed and they decide whether they're going to let you live or die. So you want to be careful who you leave in charge of your personal care power of attorney. I told Sandra a story once about one of my clients who had his business partner as his personal care power of attorney. So I get this terrible panic call from his girlfriend that the guy had been doing a test at Sunnybrook. The test went wrong. The guy was on life support. The partner was the power of attorney, and he wanted to pull the plug. So then I saw the buy-sell agreement between the two of them, and I could understand why he wanted to pull the plug. So anyway, we kicked up a fuss. The guy's still alive, and I'm sure he has no idea that his partner was trying to do him in. So you've got to be careful who you use as power of attorney for personal care. And they can be generalized. When you have a power of attorney, you can either have one person or you can have 2 people or 3 people. Now, if you say that it's jointly and severally, that means any one of the 2 or 3 can sign. So jointly and severally means any one of the 2 or 3 can sign. If you name 2 people and you say it's jointly, then they both have to sign. So it's so when you're looking at documents, you want to make sure as to whether it's jointly and severally or not. Then you've got what's called the property power of attorney, and that's dealing with your money. So it basically, the personal care deals with your health issues. It deals with your long-term care issues. The property power of attorney basically deals with everything else and includes your house, your bank account, all of those sorts of assets. And it's what I often think of that as a lethal weapon. Because if you ask the title insurance companies, the biggest frauds they have now, or the biggest source of fraud, isn't people from Eastern Europe stealing, putting mortgages on people's houses. It's family members defrauding the family. So you have to be careful. And again, with that, you can have it jointly and severally, or you can have it jointly so that you've got 2 people signing, or you could have 2 out of 3. So you have to be careful that you get somebody that is trustworthy when it comes to that, because they actually have control of your assets. So as far as the property power of attorney is concerned, and the personal care power of attorney, personal care, there's no obligation that you have a lawyer witness. The property power of attorney, for some reason, and it's totally unjustified as far as legalities are concerned, the banks are now wanting a lawyer's signature and notarial seal before they will recognize a power of attorney for property. So if you want one that's going to work with the bank, you've got to get the lawyer to sign it. You can have totally open-ended powers of attorney, but you can also have limitations on them. So I usually use the illustration of somebody off on a cruise. I don't think anybody's going on a cruise for a while now. But let's say you're in safari in Africa for 3 weeks and you may have a deal going. You could appoint somebody just for those 3 weeks. So you can be limited for time, or you could be selling a particular property and you could leave a power of attorney that's restricted to that particular property. So you can have restrictions as to time and also restrictions as to the scope. So those things you need to think about. If you don't have a power of attorney, it's a mess, because you would think that if there's no power of attorney that the other spouse would automatically have the right to sign. They don't. So if you don't have a power of attorney, then it's basically an application. Public guardian and trustee's office takes over, and then you have to apply to become that person's power of attorney. And strictly speaking, they can ask for a bond, and sometimes the bond is twice the value of the property that you're looking after. So in some ways, it's more vital to have a power of attorney than a will. It's even more. So the other thing with a power of attorney is you can have a power of attorney that only kicks in when the person becomes incompetent. So that while you're still competent, this is property power of attorney, nobody can use it. But then once you become incompetent, I don't really like those, because in order to utilize them, you have to get somebody declared as mentally incompetent, and that's a really serious outcome for somebody. And some people, they have good days and bad days, so so I prefer to have the power of attorney that's what we call a continuing power of attorney, without having to go and get a declaration of incompetency. So then once somebody dies, of course, the will kicks in. And wills are relatively easy to do. They require two witnesses who have to be in the presence of each other. It's required physical presence until recently. Very recently, there's a rule now that you can do it by video, but one of the witnesses has to be a lawyer or a licensed paralegal. But they have now opened that up. Before that, you couldn't do it. It's pretty simple. We have a fairly simple, like the little form that you have to fill in, because my thought is always it's much more important to have a will than to have a fancy will and never get around to doing it. So pretty straightforward. You have to think about having an executor. So the executor is basically the person that looks after everything after you pass away. They would be the one signing the papers to sell the house, signing your tax return where Justin gets his piece of your estate. They would be the person that basically administers. They called you a personal representative, but they essentially deal with it. Now, if you don't have a will, lots of people think it all goes to the government. It's Mr. Ford and Mr. Trudeau don't have a party when you die. There are all kinds of rules as to what happens if somebody dies without a will. There's what we call, there's an intestacy scheme. Now, the one thing that freaks everybody out is if you are common law, you don't necessarily get anything. So in other words, if you've been living with this person for 50 years and you never got legally married, there's no automatic right to any part of their estate. You may be able to claim it, but there's no automatic right. So that's usually a big incentive to people to want to run out and do wills, because it's completely counterintuitive. But that's the way that the courts have ruled. Now, if you die and you don't have a will, then your spouse, your surviving spouse, if there are children, gets the first 200,000 and then splits the rest with the children. If you don't have a spouse and you do have children, the children would get anything. No spouse, no children would go to parents. After that, it goes to brothers and sisters. So essentially, there's a saying, where there's a will, there's a beneficiary, or where there's an estate, there's a beneficiary. Somebody comes out with their hands up saying that they're entitled to the money. So I probably have run out of time, have I?
You're close, yes.
Close?
Fine. Yes.
So really, just very quickly, what doesn't go through a will? So if you've got a property that's in joint tenancy, it doesn't go through a will. When you go through a will, of course, it's slow, 4 months anyway, and at the moment probably longer than 4 months. So if you have something if you register property in joint tenancy, it automatically flips over on death. So you don't have to wait for a will. You can also designate beneficiaries on life insurance policies and RRSPs and I think TFSAs, and those then don't become part of the estate. People worry about the estate tax. It's in fact 1.5%, so it's pretty minor. And as far as any other tax, it's like you sold everything the day before you died, so it's like a capital gains tax the day before you died. So you're probably going to have lots of questions, but that's kind of a thumbnail sketch.
Oh, that's great, Jonathan. Thanks very much. Very informative and helpful. And I'm sure it's also a really good reminder to us to maybe it's the time to go back and revisit our important matters as well and get this looked after. So the other thing that you'll want to look at in the pre-planning stages is also your finances. So I'm going to see if I can share my screens now on that. Hang on one second. There we go. Can everyone see that? Awesome. So financing your next move. If you're thinking of downsizing, you may be moving into a rental property or another form of accommodation, but you may also be buying another property. And if you're going to be buying another property, you'll also want to have some discussions about a mortgage. And how much of a mortgage will you qualify for, and what will the payments be? And this will be really helpful for you as you're doing your planning. And if you are buying a home, another home, you'll also have to be considering your initial deposit. And this is something that we'll look at in the initial stage as well, in the pre-planning stage, and make sure that you have the money available for that. And because you engaged your real estate agent right in the very beginning, at the early stages of pre-planning, you're going to know they've probably been into your home and given you an idea on the value of your home. And they've also probably told you if you're going to have to do any renovations. Sometimes there's some small renovations you need to do, and this will help maybe get you a higher selling price. And they're going to have given you an idea on this. And your real estate agent, as we said before, also has that stable of professionals that they can refer you to. They probably have someone that they can refer you to so you can get some estimates on the cost. So again, in the pre-planning stage, we can look after and talk about the financing and make sure you have the money available to do the renovations, to have an initial deposit on your next home, if that's what you'd like to do. And sometimes people who are selling their home, maybe there's a major purchase they want to do, or maybe they need to consolidate some debt or need some extra cash. We can also look at that in the early stages. One of the things that you may have heard in the last few years is that there's been a lot of government changes. And so there's a lot of conditions that, that have to be applied. And one of those changes is also the stress test, which I'm sure you've heard of. So you'll want to make sure that you've got all this covered. And it can seem a little bit overwhelming, but really there's lots of options available. So we have, maybe what you need is a secured loan, a small secured loan. And sometimes with these small secured loans, they're available without the stringent income and credit verifications that maybe a larger mortgage might have. And of course, the optimal choice is probably a line of credit. Lines of credits are very, very flexible and really good for this transition period that you're working for. So we can also look at those. And the other one that, that we seem to be seeing a lot of now is the reverse mortgage. It is the new emerging trend, and there's many reasons for that. But one of the reasons is the demographics, of course. And so I wanted to spend a little bit of time, because it's relatively new, I'm sure you've heard of it, but I just want to share a little bit about how a reverse mortgage works. And so give you a bit of an understanding of it. And I like to think of it as being similar to a line of credit. And with a line of credit, you're given a limit. And with the reverse mortgage, you're also given a limit. There are a couple of major differences between the two. The first one is that with a line of credit, you are expected to make interest-only payments monthly. And you're also expected to make periodic principal payments. With a reverse mortgage, it's a lifetime limit, and really the purpose is that you don't have to make any payments at all. Instead, interest is added to your mortgage, and when you sell your home, you'll pay off your principal and your interest at that time. So I decided I would do a chart just to go over some of the differences. So here's the chart. I know it's a little cluttered, but it will help us to do a little bit of a comparison. So a line of credit, the approval. So every lender is a little bit different on their criteria, but so this is just general information. And it may be more specific or different with every different lender. But generally speaking, a line of credit is approved your limit is approved mainly on your income, your credit, and the value of your home. Also, one of the things we're finding right now is that purpose really plays a part in the approval process as well. And of course, there's going to be a stress test added to it as well. And with the line of credit now, it used to be that it was up to 80% of the value of your home. And one of those recent changes is that they only give you up to 65% now. Now with the reverse mortgage, your approval limit is based mainly on your age and the value of your home. Now, the other thing is that with this one, you must be 55 years of age or greater in order to apply. And the amount that they give you is a little bit lower as well, a maximum of 55%. So when you get a line of credit, you're given your limit, and you do not have to have an initial draw on it. You can just keep it there for future, and if you don't use it, there is no cost to you. No interest cost at all. With a reverse mortgage, they do have an initial draw. So you're given your approval limit, but you must draw $25,000 to begin with. And any subsequent draws that you make, they're a minimum of $5,000. So that's a bit of a difference between the line of credit and the reverse mortgage. And again, here we have the payments. So interest only monthly with periodic principal payments is what is expected with a line of credit. And with the reverse mortgage, no monthly principal or interest payments are required. Instead, interest will get added on to the mortgage and you'll pay it at the end. A line of credit is completely open at any time with no penalty. With a reverse mortgage, it's open after 5 years. So there is a penalty if you want to pay it off before the 5 years. And for this reason, sometimes a reverse mortgage may not be the best option if you only need short-term financing. The rate on a line of credit is usually a very attractive rate. It's based on prime, usually prime plus, maybe prime plus a half, prime plus one, depending on your loan amount, depending on what's happening with the economy, and depending on the lender. With a reverse mortgage, the rate is usually a little bit higher, but they allow you to take a variable or a fixed. So there are some other options there available to you. And then we have the other major difference. So one is the payments and the other one is the purpose. And this is really important for everyone to understand. And it may make a difference as to why you would choose one over the other. So with a line of credit, it's actually a revolving demand loan. So in the beginning, way back when lines of credits first came into place, they were really for businesses. And they were meant to be short-term financing for businesses so that they could operate their business, and then when their money came in, they were able to pay down the line of credit. And then they realized that maybe this would work well with consumers and their residential homes. So they gave these secured lines of credits. And the reason for this is if you're approved for a limit, rather than having to come in this year for a loan to get your roof done, and then you pay that off, and then the next year you go back for a loan to do the kitchen, and then you pay that off, and then 2 or 3 years later, you decide that it's time for a car, so you have to go back in and apply again. This way you're given a limit, you have access to it, and you're allowed to draw on it for whatever your needs are. And it's really worked out very well. But it is meant that you are supposed to be paying it down. And that is one of the issues that the government has as well, is that you're not supposed to go up to the limit and stay there. And one of the things that, because it is a revolving demand loan, is that they can change things on your line of credit with you, even if you haven't done and requested anything. So for example, one of the institutions back in 2008, when we had that bit of a recession, one of the institutions increased the interest rates because of the economic conditions. So everyone who had a secured line of credit had an increase in their interest rate. So something that they weren't expecting. And the other thing that I've seen happen, and this is really important, and a main concern that you want to consider if you're going to get a line of credit. A lot of people think, oh, I'm going to retire soon, so while I'm working, I'm going to go out and I'm going to get a line of credit. And I've got this income, I've got my house, I'm going to get approved for the maximum I can. So you go ahead and you do that. And then you head into retirement and things are going well. But maybe what would happen is your spouse passes away and then you go back into the bank. Well, all of a sudden the bank says that since he's passed away, they're going to close out that joint line of credit, and now you have to apply for a line of credit on your own. And so now you're on your own, you're retired, your income is less, you don't have the income of your spouse to add to the application, and you probably won't qualify for nearly as much as what you did prior. And that could really put a wrench into some of your plans and make you feel a little uneasy. Where the purpose of a reverse mortgage is it is a lifetime limit, and if you're married, both of you must sign it, and both parties, even if someone passes away, are allowed to have that lifetime limit until they sell the home. So that's kind of one of the major differences. And you can see that line of credit, reverse mortgage, they both have benefits and they both have some other things that you may want to consider. And I think that as you move forward with the process, what's really important is to really understand that there are lots of different financing options available. And the key is the pre-planning. And I'm just going to go back here now. So we're at 2:46, which is just a little bit past our time. It's 45 minutes. I did notice that we had some questions coming up. Let me just see if I can see those. Here we are. So Claire, one of the questions that came up earlier was, during COVID, are you working?
So, excuse me, I have not been working. I'm hoping to open that up in May, and as much as possible, I'll do consultations over the phone and hopefully work mostly in homes that don't have people living in them, or, you know, little bit of contact. So I haven't been working, but May is when I'm hoping to start again. But all my consultations are free. And even when I do open up, I'll be, you know, making sure there's physical distancing. I'll be wearing masks and gloves as I move forward.
Super. And one of the other questions, Claire, was during COVID, are companies like the recycling bookstore still working or not?
Right. So pretty well everything is closed from a donation perspective. However, just this week, Second Life Books has instituted a no contact policy. So if you put your books in a box on the veranda, they will come and pick them up as long as you've made arrangements with them.
Great, super. And Jonathan, how much is a power of attorney and a will usually to arrange it?
So at the moment, will and power of attorney, or will and the two powers of attorney, personal care and property, for a single individual, I think is $495, and for a couple, I think it's $795.
Okay, all right, well, that's pretty reasonable. That's great, super, thank you. So with regards to the financing, we are going to be having a follow-up webinar on that with a financial planner and someone from CHIP, actually, to answer any questions and bust some myths that might be out there. And that's going to be in a couple of weeks. So if you'd like to register for that, you can email me. It's a little bit difficult to get to all the questions here. So if we missed your question, you can feel free to email us directly, and we'll try and address it for you. So to summarize, when downsizing, pre-planning is the key. And most importantly, engaging your realtor early in the process. So at this point, I'd like to thank Claire and Jonathan for sharing. Thank you very much. And yeah, and thank you for attending our webinar. We really appreciate it. And we're going to sign off with good health, wishes of good health to all. So thank you very much for coming, and stay tuned, and you will be able to see the email addresses. Thanks again. Okay, we're going to sign off now. Thanks again.
Thanks. Well done, Sandra.
I'm just having a hard time finding the end.